How to calculate price targets for stocks. How many times have you bought a stock, you watched it go up in price, and then a few days, couple weeks later, it drops right back down to the exact same price that you paid, maybe even goes lower? Be honest here. The reason that beginning traders watch their stock round trip and go back to where they entered is because they're trading without a plan. So if you're going to trade, we want to have the old adage, plan your trade, then trade your plan. That means follow through on what you've planned out. My name's Corey Halliday, and today I'm going to help you to avoid what is known as round tripping your gains. We're going to talk about how to calculate some price targets, how to project within trends, how to have a more simplified approach and systematic approach to planning out your trade so that it's not emotional, so that you're not making decisions based on greed or fear, FOMO, the fear of missing out, all those things that can create hurdles for you. So let's get started. So if we come over and look at this particular chart, here we've got a chart of FedEx. And one of the first things we need to do as traders is identify what type of trend the asset we're trading is in. Meaning, are we trending or are we trendless? Are we simply going in between levels, right? Or are we on our way to bigger gains or bigger losses? In this case, this particular stock is trendless. We have an upper end of the range, we have a lower end of the range. And the trade here is simply, when would we take profits? We're not going to round trip this. We're not going to buy here, run it all the way up here, watch it fall apart and come all the way back down to where we bought it, right? We want to buy at the lower end of the range. We don't have to pick it perfect, but down here where we expect there to be support, we can buy, and as it runs to the upper end of the range, we can sell and take profits. If it gets to the bottom end of the range, we can buy. Maybe we even short here, play it to the lower end of the range, take profits. The idea is simply to identify its key levels. Well, that's great. If it's a sideways range, okay, we'll buy at the low end, we'll sell at the top end, short at the top end, we'll cover those shorts at the bottom end, we'll make money trading the range. How about a trending stock? Well, in a trending stock, it works much the same way, but now you're going to forecast. So you're going to take trend lines, and the same way you would drag a trend line underneath the bottom area, you would drag a trend line underneath or over the top of the top area. So if I were trading Nvidia during this phase, if I'm looking to buy anywhere around the moving averages and such, I'm targeting a move up, and as it gets to the upper end of the range, I'd be looking to take profits. And as it gets to the upper end of the range, we take some profits, and upper end of the range, and we take some profits, and so forth. And if a new consolidation occurs, well, if we're trading it during this phase, then we're going to try as best we can to be more sellers at the top end of the range and buyers at the bottom end. Now it's starting to break out again, just starting to upward trend. So we're going to start to forecast our trading ranges, but in the opposite manner, right? Now we're going to look at the trend. We're going to drag a line under the bottom end of the range, and then we're basically going to take a parallel line and drag it across the top end of the range. So it's really always range trading, but sometimes the ranges are sideways and sometimes the ranges are sloping upward, right? And they're more in this fashion. If it's a sharp downward trend, well, guess what? Everything would work in the opposite direction. Let's take AT&T. If this stock is trending lower, as we suspect it might, or look at the big breakdown on heavier volume. If this is going to trend down for a while, we're going to take, I didn't have my drawing tool correct, we're going to take a trend line and we're going to slap it underneath like that. And then what's going to be our target? We're going to do something parallel to that. Basically the same line, but we're going to slope it out this way and make it parallel. And where would we take profits? Well, if we get down here towards the bottom end of the range, you take profits. If it ever comes back up towards the top end of the range and you're confident the downtrend is going to persist, you can reshort. trade it down to the bottom end of the range and take profits. So we are forecasting across when there's a trend. You're looking for slope. You're looking at the way in which something is going upward or downward. And as you get towards that range, you're going to take it off. Here we might even say, look, this is in a big range in this fashion, right? This looks like, I just spotted it, but this looks like the best range for AT&T. Here's more of the bottom end of the range, and here's more of the top end of the range. Now, someone might say, well, that's all great, that's all fine and well, but it's not perfect. I can't do this perfectly. I can't forecast perfectly. Well, guess what? Neither can anyone else. The idea that you're going to pull up a chart and you're going to be able to perfectly forecast. I wish weathermen were better at forecasting than they are, right? They're better than I am. They understand weather patterns and this and that. They have more track record of figuring things out, but they're not perfect at it. Nobody is, and nobody is when it comes to trading. But by having a plan, by looking at these levels and saying, okay, whether it's true or not, if I can find something that really stands out like this, it assists me, it helps me because I'm able to quantify my risk and quantify my reward and make sure that they match in a good fashion. And then if I do other things like trading with the trend and using momentum and those things to my favor, but I have a 1 risk and 2 reward, 1 at risk and 3 reward. I keep that reward to risk ratio in my favor. I don't have to be perfect, nor can anyone else be perfect. So the idea that, this is going to be perfectly forecasted is just not reality. It's not what you really should anticipate. What you should anticipate is, well, I can get good at this and it can really help me so that if this were me trading AT&T, and look, we just spotted it here on the fly. If I look at this, look at the number of touches to the lower end of the range. It hit there once. It screamed up to the high. Now this high, this line is basically parallel to that line, right? So there's one trade to the upside. Comes back again, we can rebuy. Goes up towards the top end of the range. Now it kind of went choppy. Took a while, but it got there. Came back to the bottom end of the range. You can buy again, and it got there. It's come back again. AT&T might be a candidate for buying at the bottom end of the range for another run towards the top end of the range. Do I know that it's going to go there? No. Now, I would say that I don't quite love this pullback, the fashion in which it's fallen, but it's a good risk to reward. If I buy here and this trend line doesn't work, I'm going to stop out just below and I'm going to risk very little. If it does work and we pivot higher here and work towards the top end of the range, my reward on something going back up to the top end of the range here might be 10 times what I'm risking. Risking $100 to make $1,000, that type of idea, because our risk level here, trading off of the channel line and putting a stop below, our risk is very small and contained. A move to the top end of the range is substantial. It is multiples bigger, 8 to 1, 7 to 1, 10 to 1 type of reward to risk ratio if you get a big channel like this. So the idea, again, is not perfection, but being able to map out a plan and really say, okay, what makes sense? Let's brainstorm one more. Let's say I knew AT&T had been falling recently. What about, here's Alaska Air. So Alaska Air has been falling recently. Well, do we think this is sustainable? We're going to look for channels. We're going to look for trends. We might say, okay, this one looks like we came from a big downward trend, went through an upward phase, and we're dropping again. Maybe I want to take a little bit further look at this and see what we're working with in context. Let me squish this down so it'll all fit, and let's take a look at it. So, as I look at this chart, I would say we had a little bit of a trend here that had been intact, and it was broken. Right? This channel that had been working to the upside has been broken to the downside. And what is often the case is you'll fall similar to how you fell previously. So this downward phase, sharp and violent and steep, we might see something quite similar to that, sharp and violent and steep, moving in this fashion. And frankly, that's what I would expect. That's what I would anticipate. So as you brainstorm through different things, AMD was in the news today as a chip stock. Big gap up on news that they partnered with OpenAI and going to do some chips and things. Well, does it have sustainability here? It's probably at the top end of the range, or maybe even beyond the top end of the range. It was, and this would be a profit taking opportunity, because as it works to the top end of the range, we want to take it off, move to the bottom end of the range, repurchase. Top end of the range, we'll take it off. Now it might move down here to the bottom end of the range, and we would consider repurchasing for that next wave of upside. But this is a great example where today you get a gift, the stock jumps all the way up to the top end of the range. We go ahead and lock in those profits, and away we go. So now that you know how to plan a trade correctly by setting your price targets, by placing stop losses, by having excellent reward to risk ratios, it's time to go out and find good candidates to trade. Check out this video on 6 screener settings we use on FinViz to quickly scan through and find stocks to trade that have great potential for swing trading opportunities, where you can take advantage of things that we just talked about. Don't forget to leave a comment below. Let us know what you thought, what questions you have, how you're investing, how your trading is going, and tell us how you set price targets. I'm curious how other people do it. I know a lot of different methodologies. We can use ATR, we can use different concepts that we teach our students, but make a comment below on your favorite way to set your targets. Now go and check out our FinViz video on 6 screener settings now.